For the first time this year, economists surveyed by the Singapore Central Bank have raised the overall GDP growth forecast for 2019. And this comes after third quarter readings defied previous forecasts. And this optimism has spilled over to predictions for next year, with the GDP anticipated to expand at 1.5%, led by a recovery in the manufacturing sector.
Economists polled in the latest central bank survey for the Singapore economy appear to be more optimistic this round. That's after the country posted better than expected third quarter results. For the first time this year, its growth forecast has gone up, with the full year figure now at 0.7%, up from 0.6% previously. And experts remain buoyant going into next year, with the manufacturing sector turning the corner. It's expected to move from a contraction of 1.4% this year to a 0.7% growth next year.
We're actually expecting that demand and production for electronics will improve. It will mean that electronics will no longer be contracting and we will not see that big fall in semiconductors that we've been experiencing on the production side in Singapore. That will also provide some support for exports as well. And also we're also seeing some improvement on the Chinese import demand, real sequential growth.
Overall, GDP growth next year is expected to grow at 1.5%, better than this year's 0.7%. Besides manufacturing, wholesale and retail trade along with accommodation and food services are expected to support this. Construction as well as finance and insurance are likely to grow, but more slowly. Another bright spot is non-oil domestic exports. It's been in the red for many months, but now estimated to expand by at least 1.6% next year, beating the total contraction of 9.1% this year. But the cheer over the economy might not mean more will be spending, with private consumption growth likely to slow.
Private consumption in 2020 could still remain weak relative to this year, primarily because that's more of a lag effect of the weaker wage growth this year, more subdued labour market condition that may persist into next year.
The poll also showed that confidence for next year continues to be tempered by risks of US-China trade tensions and a sharper than expected global economic slowdown. Its GDP forecast range is 1.5% to 1.9% for next year, while official estimates are between 0.5% and 2.5%.